The headlines are screaming, the charts are a sea of red, and right on cue, the same old skeptics are being rolled out on financial news to declare for the thousandth time that this is it. This is the end of Bitcoin. This isn't just another dip, it's a classic shakeout. It's a massive transfer of wealth, moving from the impatient to the patient. Three of the most respected minds in finance are calling this a gift for the next wave of crypto millionaires. Michael Saylor, whose company MicroStrategy holds well over 215,000 Bitcoin, continues to buy the dip, calling his strategy an indestructible way to withstand these exact kinds of pullbacks. Kathy Wood of ARK Invest is still forecasting Bitcoin to reach astronomical figures by 2030, despite the crash. In this video, we're not going to focus on the fear. We're going to look at the data. We're going to show you exactly what the whales are doing, what they're buying, and why this brutal, gut-wrenching crash is quietly making millionaires. Stay with me, because shifting your perspective is the first step to making sure you are on the right side of this wealth transfer. To really get the opportunity in front of us, you first have to understand the game being played. This market environment is a masterclass in psychological warfare. The story being pushed by the media, one of failure, collapse, an experiment gone wrong, isn't an accident. It's a tool. It's how large, sophisticated investors create the perfect storm for accumulating assets at a discount. Let's break down the psychology of the average investor, what the crypto world calls retail. They likely bought in during a moment of pure hype. They saw prices rising, heard stories of overnight millionaires, and got hit with a massive dose of FOMO, fear of missing out. Their entry wasn't strategic, it was emotional. Now they're watching their portfolio bleed out. Their investment is down 20%, maybe 30% or more from the top. The headlines confirm their worst fears. Their friends are all panicking. Every human instinct is screaming to cut their losses and sell. This is called capitulation. When the crypto fear and greed index plunges, it's a direct measurement of this exact panic. But here's the key. This moment of maximum pain is the #1 buy signal for smart money. They get that financial markets run in cycles of fear and greed. They patiently wait for the fear to boil over because they know that's when assets get seriously undervalued. They are literally buying the fear. They're providing the cash for the panic sellers. While the retail investor sees a crisis, the whale sees a discount. They see a fire sale on a world-class asset. The on-chain data is undeniable. During the recent plunge, large wallets got fatter, while small wallets got thinner. It's a textbook wealth transfer happening in real time. So what's causing all this orchestrated FUD, this fear, uncertainty, and doubt? It's a perfect storm of short-term problems. First, you have macro uncertainty. Worries over inflation, the Fed's next move, and a potential recession are hitting all risk assets, not just crypto. When money gets tight, speculative bets are the first to go. Second, there's regulatory noise. Governments are still figuring out crypto, and any hint of a crackdown spooks the market. Third, we've seen big outflows from the Bitcoin ETFs that launched with so much hype. Early investors are taking profits, creating sell pressure. And finally, we've seen massive liquidations, where billions in leveraged bets were wiped out, forcing prices down violently. Individually, these are all real concerns, but together, they create a tidal wave of negativity that's more than enough to shake out anyone who's not prepared. Smart money knows these are just short-term headwinds. They're looking past the next few months and focusing on the long-term, unchangeable facts about the asset. You're feeling the pressure. You're seeing red everywhere. Every instinct is telling you to sell. And that's exactly what the architects of this shakeout want you to do. They need your Bitcoin, and they want to buy it from you at a price you'll be kicking yourself for in a few years. The first step to beating them is to realize you're in a game and refuse to play by their rules. So if the amateurs are running for the exits, what do the whales know that they don't? What gives them the confidence to buy aggressively into what looks like a total market collapse? It's not magic. It's a deep understanding of history, technology, and macroeconomics. It's a playbook. Let's break down the three core reasons why they're loading up on Bitcoin right now. Experienced investors know Bitcoin's volatility isn't random, it's cyclical. They've seen this movie before. The road to new all-time highs is never a straight line. It's a series of violent, gut-wrenching advances followed by brutal 30%, 40% corrections. This current crash, down over 25% from its peak, is standard for a Bitcoin bull market. It's not a bug, it's a feature. These corrections are needed to wash out all the risky leverage, shake out the nervous sellers, and build a stronger base for the next leg up in the market. Whales are buying now because historical data suggests the bottom is near. Technical analysts are looking at the $85,000 to $90,000 range as a major area of demand, a level that could mark the final dip before the next major rally. They are buying when there is blood in the streets, a classic investing motto. They thrive on the fear that freezes the average person. And they're basing their decisions on future price targets, not today's price action. Even with this downturn, analyst models are still pointing to prices between $125,000 and $200,000 by the end of 2025. Long-term forecasts from names like ARK Invest predict Bitcoin reaching anywhere from $500,000 to over $1.5 million by 2030. When your target is $500,000, buying at $90,000 looks like an incredible bargain. You're buying something for a fraction of what you believe it will be worth. Now, join me in the next room, and I'll explain how to think about this in the right way. This might be the biggest difference between retail and whale thinking. Amateurs see negative headlines about the economy and think, sell. Whales see those same headlines and think, buy. Take inflation and recession fears. For the average person, a recession means job worries and less cash to invest. They sell assets to save money. For a high net worth individual or institution, persistent inflation is the number one threat to their wealth. They are desperately looking for a safe haven, an asset that can't be devalued. Bitcoin as digital gold is the modern answer. They're not selling Bitcoin to get cash, they're selling cash to get Bitcoin. Now, think about regulatory scrutiny. The headlines scream crackdown and retail panic. Whales read that and see clarity. They get that for crypto to go from a niche hobby to a global institutional asset, it has to be regulated. Regulation, while messy at first, is the on-ramp for the big money. In fact, institutional surveys show that regulatory clarity is seen as the single biggest driver for future growth. It removes risk for fund managers and provides the legal safety they need to allocate billions. Finally, let's look at the ETF outflows. Retail sees the red numbers and assumes the big money is cashing out. Whales see a natural rebalancing. The ETF launch was huge and hype-driven. It's totally normal for some of that early money to take profits. What whales are doing is using this temporary dip in demand to buy up as much as they can before the next, more sustainable wave of institutional money arrives. They know the ETFs have made Bitcoin an approved asset for thousands of financial advisors managing trillions of dollars. The first wave was just a ripple. The ocean is still coming. Please take a second and help us out by hitting that like and subscribe button. With your help, we are going to be here for years to come, helping you navigate the world of digital finance. If you're starting to see the bigger picture, if you're ready to stop thinking like retail and start acting like a whale, do me a favor and hit that like button below. It tells the algorithm that this message of patience and strategy needs to be heard, that there's an alternative to the mainstream narrative of fear. It helps get this info out to others who might be about to make a huge emotional mistake. And if you want to get ahead of the next major market move with data-driven insights, make sure you subscribe and hit that notification bell, because what I'm about to share next is the most important part. We've covered the why. Now we're going to break down the how. This is your practical guide for turning this market chaos into a life-changing opportunity. Don't miss it. Okay, so you get the why. You see the game being played, you recognize the psychological traps and the reasons why smart money is buying this dip with both hands. But knowing isn't enough. Knowledge without action is just entertainment. You need a plan. So, how do you actually do this? How do you turn this period of extreme fear into your own personal wealth building machine? Here's your success blueprint. No rocket science, no endless chart watching required. With three real world pillars: disciplined buying, a rock solid portfolio, and a mindset that can't be shaken, you're already ahead of the game. As I head back upstairs to my desk, get ready for the smartest, safest crypto accumulation strategy you'll ever need. Next. The single biggest mistake people make is trying to time the market, trying to pick the exact bottom to buy and the exact top to sell. It's a fool's game. Even the best traders get it wrong most of the time. Whales don't time the market perfectly. Instead, they scale in. They buy in pieces as the price goes down. Your way of doing this is with dollar cost averaging, or DCA. DCA is just investing a fixed amount of money at regular intervals, no matter the price. For example, you decide to invest $100 into Bitcoin every single Friday. If the price is high that week, your $100 buys you a little less Bitcoin. If the price is low, like it is now, that same $100 buys you significantly more Bitcoin. Next, you need to know what to buy. In a market with thousands of altcoins, many of which will go to zero, your foundation has to be built on solid rock. In crypto, that rock is Bitcoin and Ethereum. Your main focus, especially during a downturn, should be on accumulating these two assets. Think of them as the digital gold and digital oil of the new economy. Bitcoin is your digital gold. It's your core store of value. It has the fixed supply, the decentralization, the security, and the brand recognition that no other digital asset comes close to. It's what institutions are buying. It's what the ETFs are built on. It's the bedrock of the entire crypto world. Your Bitcoin position is your long-term savings account, your shield against inflation, and your primary bet on the future of money. Ethereum is your digital oil. If Bitcoin is the store of value, Ethereum is the global, decentralized computer that powers everything else. It's the core infrastructure for decentralized finance, DeFi, NFTs, and the tokenization of real-world assets. And thanks to a mechanism that burns fees, Ethereum can actually become deflationary when the network is busy, meaning more ETH is destroyed than created. On top of that, by staking your Ethereum, you can earn a yield, typically between 2 to 5% annually, paid in more Ethereum. It's like owning the oil fields of the new digital economy and getting paid a dividend while you wait. By focusing most of your efforts on Bitcoin and Ethereum, you're not chasing speculative pumps. You're making a strategic long-term investment in the two most established and institutionally recognized assets in the game. This might be the hardest and most important step. You can have the perfect buying strategy and the perfect portfolio, but if your mindset is weak, you will fail. The whales don't just have more money, they have more patience. Second, you must reframe what a dip means. A price drop is not a loss unless you sell. Until then, it's just data on a screen. For a long-term accumulator, a price drop is a gift. It's a chance to lower your average cost and get more of a world-class asset at a discount. You should learn to get excited when the price goes down because it means your next DCA purchase will be that much more powerful. Third, educate yourself continuously. Your conviction is your armor. The more you understand the fundamental value of Bitcoin and Ethereum, the less you'll be shaken by short-term price moves. Listen to podcasts from industry leaders. Understand the halving. Understand DeFi. And don't miss any of the BlockStarU educational content. The more you learn, the stronger your belief becomes, and the easier it is to hold through the storm. Your goal is to get to a point where a crash makes you want to buy more, not panic sell. Now, once your foundation of Bitcoin and Ethereum is solid and your DCA plan is running, the inevitable question comes up: what about altcoins? We've all seen the stories of coins that did a 50x or 100x, turning a few $1,000s into a fortune. That is, in reality, the true crypto casino, and it's tempting. But how do we approach this like a whale and not like a gambler? The answer is to treat it as exactly what it is: a high risk, high reward bet. This is not your retirement fund. This is not the core of your portfolio. Whales might allocate a tiny percentage of their capital to these plays, but they do it with money they are fully prepared to lose. For every one that succeeds, expect 9 to fail. Before you even think about buying an altcoin, especially in a dip, you have to look past the hype and memes. Ask yourself 4 simple questions. What does it actually do? Does this project solve a real problem in a unique way? Is it a better payment system? A new DeFi protocol? A gaming ecosystem? If you can't explain what the project does in one sentence, don't invest. Who is the team? Is the team public and credible? Do they have a track record of success? Anonymous teams are a huge red flag. Also, is the project actually being built? You can check platforms like GitHub to see if developers are actively working on it. What are the tokenomics? This is critical. How many coins are there? Is the supply fixed, or can more be printed forever? Who owns most of the coins? Are the early investors just waiting to dump their bags on you? A project with bad tokenomics is designed to take your money, not make you money. Is there a real community? I don't mean a Discord channel full of GM messages. I mean developers building on the platform and users actually using it. The network effect is everything in crypto. Look for signs of real growth, not just paid marketing. Instead of chasing random coins, smart money is looking at emerging sectors with long-term potential. Right now, sophisticated investors are exploring areas like the tokenization of real-world assets, RWAs, the intersection of AI and blockchain technology, and decentralized physical infrastructure, DePIN. By focusing on sectors such as AI and blockchain, you can identify a handful of promising projects instead of betting it all on one long shot. But listen up, and let me be very, very clear. This is the casino. This is where you can get wrecked. Your allocation to altcoins should be a tiny fraction of your portfolio, and it should only be with money you are 100% willing to lose. That is the cardinal rule of the altcoin game. First, see the panic for what it is: a tool used by smart money to create discounted buying opportunities for themselves. Second, understand why they're buying. They're ignoring the short-term noise and focusing on unbreakable long-term fundamentals: Bitcoin's scarcity, institutional adoption, and its predictable 4-year cycles. Third, you have a clear plan. Implement a disciplined dollar-cost averaging strategy. Build your foundation on Bitcoin and Ethereum, and master your own psychology by zooming out and learning to see dips as discounts. The millionaires of the next crypto cycle aren't made during the euphoric peaks when Bitcoin is all over the news. They're forged right now, today, in the depths of fear. They are the ones with conviction when others have doubt. They are the ones buying when every instinct says to sell. This moment of maximum pessimism is the point of maximum opportunity. History will look back at this period not as the end of Bitcoin, but as one of the last great chances to get in before the floodgates truly open. The choice is yours. Are you going to be part of the panic-stricken crowd, or are you going to join the smart money? Let me know your strategy in the comments below. Are you holding? Are you buying? What's your plan? Subscribe for more updates, and let's navigate this opportunity together.